Okay, many of you are curious about this MACD indicator that I have introduced in the last 1 year. So, if you have read my book, this wasn't covered in the book. I accidentally discovered this while building Maya. When I was building Maya, I started out with this thought process that, as a human, I need to only use a handful of indicators. You should not use more than three indicators because it gets really confusing. But cool thing about computers is they don't get confused. So if you give them two indicators and you give them 2000 indicators, all it's doing is executing a set of instructions. So it doesn't really care and it doesn't get confused. So I started out building Maya with a lot of indicators. So I would say I had 20 indicators that I started. And what I did was I started eliminating indicators one by one, tweaking with their settings. So if I take MACD, I would change different settings. If I take EMA, I would try different settings. That's why it took me a long time to come to a point where Maya's win rate stays above 70% most of the time. I started using MACD indicator and that really helped increase my win rate because what MACD indicator is, uh, you can see on my screen, it's a really simple indicator. So at the bottom, I have two MACDs, but look at the bottom one. The It says there 12, 26, 9 MACD. If you add MACD or moving average convergence divergence indicator to any platform, any charting platform, that is the default setting it will show you. That's the default. And what it shows you is it shows you two things. First, is a stock in an uptrend or downtrend? And second, it is really good at spotting reversals. So in this case, I have this energy stock called Valero Energy, VLO. So look at MACD. At this point, it's showing you that the blue line is crossing below the yellow line. The blue line is called the MACD line, and the yellow line is called the signal line. So blue line crossed below signal line. Whenever that happens, a trend change, it's telling you that a trend change is happening. So in this case, you can clearly see that the VLO dropped like crazy after that. Uh, it's a pretty significant drop. Let's see how much the drop is. It's a 26% drop in pretty much 3 days. So if you can spot that, you it helps you get out of your trades early before they turn into big losers. So that's one thing. Second thing is you can also use it to spot a bullish trend reversal to get into a trade. So look at this point. On 612, MACD is crossing, the blue line is crossing above the yellow line, telling you that the stock is going into an uptrend. A new uptrend is starting. Now, there is a slight problem with MACD. It's a lagging indicator. So what will happen is you will see that the stock will start moving up and 5 or 6 days later, MACD will give you the signal to get in. Sometimes that might be too late because you would have missed most of the move already. And for that reason, when I was tweaking with MACD settings, I came up with a different setting, which is 513.5, which is the one I'm showing you above. This indicator, um, it just uses shorter moving averages. And what it does is I call it a fast MACD. It catches entry signals way earlier than the slow MACD. So let's take an example. So same example here on 6, let's say 613, the slow MACD told you there is a bullish crossover happening, time to get in. But if you are using the fast MACD, it actually caught that move right here, which was 610. So it caught that move 3 days earlier. So you can find another instance here. Although there is an earnings event interfering with this one, but just for this example, I will still point this out. So on 423, slow MACD is telling you there is a bullish crossover, a bull trend is starting. 423. If you are using the fast MACD, you would catch it on 411. So that is literally 12 days before the move happened. So that's why I use and Maya uses fast MACD to spot its entries. Now you may ask that if it uses a fast MACD to spot its entries, why wouldn't you want to get out using the fast MACD too? Because that way you will catch your losers much earlier. Now the reason I don't do that is because The fast MACD will generate a lot of noise. And sometimes if you're using that to exit, it may just be noise. You'll see a bearish crossover happening and you get out of of the trade, and you will find out that the stock just went up again. So you got out of a trade which could have been profitable. And that's why I use the slow MACD to spot downward reversals to decide when to get out of the trade.